There are no protections in this system for mom and pop and property owners. You're going to have to get involved and say, this is what's happening and it must stop. You must demand that the DAs file the criminal complaints against the Central Appraisal District's chief appraisers and the school district superintendents who are committing accounting fraud and bond fraud. You now know that the money is being equity stripped right out of your pocket. Sitting still isn't an option. And then from those people who have a little bit of cash, that they don't need the cash, 60% of all bank reserves are held in bonds. If you've got money in a bank, you've already got 600 banks on a watch out of 4,700 remaining. Are you lucky enough not to have a bank that isn't going to default?
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 15th through September 22nd, 2025, while supplies last. This week, 1 10th-ounce gold maple leaves are just $37.50 over melt per coin. 1 ounce assorted silver bars are just $1.65 over spot per ounce. We also have near historic low premiums on pre-1933 gold. Call us for details. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. I'm very delighted to announce a first-time guest today. Mitch Vexler is the president of Mockingbird Properties. He's also a nationwide, actually international, tip-of-the-spear whistleblower, advocate, and activist trying to get an important, absolutely vital breaking scandal publicized so that ordinary people all over the country, in all the states, and in other countries as well, are aware of the absolute criminal, basically extortion that they are subject to and potential loss of their own homes, their own property, and certainly the loss of their financial prosperity based on what has been happening with basically undercover but right in front of our faces in every state in the nation and in other countries as well. Mitch, thank you for coming back on Liberty and Finance this first time.
Thank you for inviting me. This is a rather deep topic, but I'm going to do the best that I can to try and simplify it so that people can understand it. And we'll get going. We'll do the best we can.
Well, this is not entirely new to our audience. Several months ago, we saw an article about a potentially nationwide scandal of property tax fraud, property tax runaway cheating. Basically, it's been happening in so many districts. The basic premise of that article said that in school districts and in municipalities all over the country, there have been, rather than as required by law and required in the bylaws and so on of all these different organizations, that they would value residential properties and other properties that are subject to property tax at fair market comparable values. They were instead backing into whatever number they needed to in order to make next year's budget by saying, well, we need to hit this budget number, so we're going to say your property is worth that. And that this has caused a host of absolutely toxic impacts. First of all, creating a logjam in the valuations, where you have the highest overvaluation and unaffordability of properties in the United States ever. And secondly, that moms and pops who are counting on trying to get what they need to out of their properties their things are sitting on the market, not selling, and the new first-time buyers, et cetera, aren't able to afford them. But then moreover, that people's taxes that they owe on their properties could become so onerous that they might lose their very property from underneath their feet and get taxed right out of their property, and that the implications of a collapse or even a severe setback to this property tax and municipal debt and school district debt bond basically complex could have such wide-ranging repercussions into trillions and trillions of dollars that could be the black swan that takes down the whole financial system, in addition to stealing people's properties. But there's more to it than that, and you're here to help us unpack it. I know you've got a state of the Texas amicus brief that you've got out and is going to be considered by the court. You're going to talk to us about that. But if you could first just help people understand what has gone so very wrong in the arena of property taxes and how has this come to be so that people can understand it, and what impacts do you see coming from that are so serious at this time?
It emanates from the idea of good intentions. And unfortunately, as Thomas Paine said, these good intentions are often met with bad people. I'm paraphrasing. The point is that what has really taken place is that the laws do exist. Uniform standards of professional appraisal practice being one of them. There's supposed to be all sorts of protections in the system. The Attorney General is supposed to protect it. The State Comptroller is supposed to protect the integrity. None of this is working. On my website is a document that was just put out about 15 days ago to the Attorney General under the Freedom of Information Act. 15 pages of turn over these documents. The Attorney General, one comment coming back was, we're not the repository for these documents. One of those documents was the probability of default. Well, they don't have one. The state auditor doesn't have it. State comptroller, all of which complaints have been filed with, doesn't have it. So the mechanism that is designed to protect mom and pop, being all property owners, in reality isn't being enforced. So what we've done, aside from this amicus brief, this amicus brief is very important because it shows just a fraction of the evidence. There's enough evidence in that amicus brief to put this on trial tomorrow morning. Never mind the other 1,100 documents I've got on my website. And what that amicus brief shows is a series of things that have taken place. Well, the prior courts, in my case, admitted that fraud has occurred, but they erred when they said it stops at the ARB panels, which is the Appraisal Review Board panel. It can't stop there because the ARBs are not trained to detect fraud. The ARBs are not trained in uniform standards of professional appraisal practice. And the third element, which is the biggest element, is that the Supreme Court itself wrote a case under Patel, that's the heading, and that says that if fraud has been committed, the court case must proceed forward. That's from the Supreme Court itself. So all we're asking the Texas Supreme Court is to allow this case to roll forward on its merits, reverse and remand the case to the lower courts. Very simple. But as the public starts going through this amicus brief, and this is the first day that this amicus brief is now open to the public. So you get it first. And it has everything in there that everybody can read to understand what's happening. But to your point, this is a pattern and practice of violating appraisal law across the United States. And this touches every single property owner, and in reality, every single citizen of the United States. And so how can I make that claim? Well, do you know that in your cappuccino, there's 7 elements of real estate tax? So if you think it through, how many production levels touch real estate inside of every single thing you do? Look at your clothing. Look at the fuel in your car. The real estate tax is everywhere, but it gets worse in terms of its size. So let's talk about the scope and scale of this. We've been able to determine that the state of Texas has roughly $606 billion worth of outstanding fraudulent school district bond debt. Across the United States, and based on that math, $5.1 trillion. Now, I will state very emphatically, we can't see all these elements. We can't see the 313 agreements. We can't see the off-balance sheet financing. We can't see the energy contracts. By the way, most people can't even see the compound cumulative interest on these problems. So what's being hidden from the public through the pattern and practice, when you look at the bonds that are being raised on an annual basis, they don't connect the dots and say, oh, by the way, we've got X billions outstanding in compound cumulative interest. And that's how we've been able to determine that the state of Texas bond program is in fact insolvent, and the SEC themselves out of Washington should march into the state of Texas and tell the Attorney General, you turn over these documents or we're going to arrest you on the spot. And that's where we are. I mean, that's how bad this situation is. Now, on the $5.1 trillion, if you realize that the banks, by virtue of the law, are supposed to keep in their reserve accounts, so cash reserves, 60% of that's supposed to be in bonds. The attorney in Washington kept looking at the 5.1 trillion and saying it's small. And so they estimated, because that's all this is an estimate, that the spider web is about 17.1 trillion. And it kind of makes sense in that if you realize that the rule of 72, these debts double up every 7 years, give or take. So it does make sense, but the problem is it can't be quantified. Well, that's kind of the big issue. So I want to break this down in a real simple term, because I just figured this out yesterday. If you go to the grocery store and the grocer says, here's a bag of groceries, and they hand you the bag, how do you know there's groceries in the bag? They won't give you what the groceries they're not going to tell you, and they're not going to give you a receipt. Well, in reality, that is exactly what is happening with the fraudulent school district bonds. They all claim, oh, everything's fine. Numbers are good. Just give us the money. Give us, give us, give us. Do you realize that the school district superintendents are committing accounting fraud and bond fraud? Do you realize that the school district superintendents, the school districts themselves, own the central appraisal districts? 83% of your tax bill, give or take, across the United States is going, so those tax receipts is going to raise bonds. 83% of your tax bill, go look at it. That money gets converted. 1 million can go up to 20-to-1 leverage, if not more. State of Texas allows 40. So, and then if you look at what is called an affordability factor and you run it, well, $1 billion in bonds, in theory, should only get you about $7 billion worth of leverage. Well, they can go up to 20. So the compound leveraged bonds outstanding, plus the compound cumulative interest, from what we can quantify, is about 5.1 trillion fraudulent outstanding school district bonds across the United States. We can't quantify everything. We can't see it. And that's kind of the point of what we're laying out. If we can't see it, and we know what we're looking for, and the Attorney General for the state of Texas has denied having the documents, and so has the state auditor. Well, plus we filed a complaint with the state comptroller, whose response was, we have no enforcement. When you start stacking this, no enforcement, no enforcement, no enforcement, IAAO, International Association of Assessing Officers, no enforcement, TAAO, Texas Association of Assessing Officers, no enforcement. Nobody's got any enforcement on anything. Well, I got news for you. That makes you complicit in aiding and abetting a criminal conspiracy to defraud. That's why the SEC in Washington has to get involved. And frankly, the SEC should shut down the state of Texas access to the bond market until this true determination of what has gone on here is brought forward. We don't have subpoena power. The SEC does. The Department of Justice in Washington can literally file a lawsuit against the state of Texas and force compliance. This is a huge, huge problem. The amount of debt that is outstanding that's fraud, just to give you an idea, we're out of money. The real estate tax does not exist to pay off these bonds. That is why the state of Texas bond program is insolvent. We found a chart, and this is inside this amicus brief, from an underwriter. And I laid out 8 points underneath that chart. That chart was presented to the public that says we're going to raise bonds for whatever they're going to do. 24 years into the future with a 4.5% coupon. And under each line item are dozens of additional bonds. But it's not broken down. Inside your own school district, doesn't matter where you are, go and ask for the balance sheet. Inside the balance sheet, you will find something called an investment pool. Nobody knows what's in the investment pool, can't get access to it. There's no notes to the balance sheet. There's no sources and uses. This one document from this underwriter has got some very interesting language. At the very top, it says, quote, unlimited tax, end quote. There is no such thing. It is a fraud. It is a fraud being perpetrated on a mass scale of biblical proportions across the United States. And what we're trying to do here is force the state to sit down with the federal government and say, we've got a problem. We effed up, and we're going to have to fix this because we've got to put a floor on this and we've got to put a ceiling on this. Because if you don't, there's a high probability that the 5.1 trillion, which is very minimal, is going to turn into something absolutely massive, as in closer to the 17.1 trillion. This can be fixed, but these are the problems that we're facing. And this is why there's so many people, tens of thousands of people this year have lost their homes due to foreclosure. Inside the amicus brief is San Antonio, Texas. In San Antonio, Texas, there's roughly 39,000 homes that are bought and paid for that are delinquent in their taxes. It's 23% of the homes that are bought and paid for are delinquent in their taxes. That proves there is no more money to steal. This is the problem. Your equity has been stripped. And that is the problem that's happening across the United States, which is why there's so many of these tax liens, there's so many of these delinquencies, and it's ramping up by the day.
Our viewers are extremely concerned about the potential for loss of property and how they're going to protect their own financial future and that of their family, their children and grandchildren. This has been raised in several different dimensions. There's a book by David Rogers Webb called The Great Taking that talks about legal changes that have been slowly but consistently made across all 50 states to make sure that nothing in the bank belongs to you, nothing in the brokerage firm belongs to you. And here you're saying even your own home and the land under your feet doesn't belong to you. Even though you may have it completely paid off, you're just subject to potential loss of your own property. You mentioned a statistic just now, like 20% of people who have their homes completely paid off, but it's like 36% or more overall, they're in risk of losing their properties. Can you focus on that briefly for us?
Unfortunately, Thomas Paine had a saying, the greatest tyrannies are always perpetrated in the name of the noblest causes. Short form for that statement is really what's called government creep. And the government has gotten bigger. And what's really going on is that they're stealing the taxes. They're increasing the taxes by virtue of fraud to cover up the fraud that they have committed with regard to the increased interest cost, compound cumulative interest cost. Well, by definition, that's a Ponzi scheme. It's exactly what's going on here. It's a Ponzi scheme of biblical proportions. There are two purveyors of fraud in the United States, two biggest purveyors, one of which is the Federal Reserve, and the other one of which is the Central Appraisal Districts, which is owned by the school districts. With regard to the school districts, they roll the bonds out and they roll the interest rates up. So the combination is that they haven't paid off the bonds in 24 years as far as we can see. We have a chart from when Governor Abbott was the Attorney General Abbott. And in that chart said in 2024, the bonds would be paid off, showing the bonds going from top left to bottom right. They were going to be paid off to zero. Okay, that didn't happen. The inverse happened. If you take that chart and flip it upside down, that's exactly what happened. They haven't paid off for the bonds. And it gets even more interesting when you realize, okay, so the school district creates a bond. Do you know that the creation of the bonds itself is a fraud? When they say, well, we're going to go build a school district, do you realize that they don't have a bid number? They don't have construction drawings to go and build a school? None of this is done through legitimate accounting. When they say, well, we're going to replace a roof, so we need X amount of roofs replaced, okay, that's fine. Where's the bid? The point is, it doesn't exist. Then they've got another interesting statement that says, any amount of bonds that we raise and we don't spend, we have, quote, discretion on how to spend it. Well, money comes in, even from the federal government themselves. Believe it or not, the federal government is getting ripped off. So the federal government, in the case of the state of Texas, writes a check for $165 billion a year to go into the school districts, allegedly. Here's the problem. The money comes from the federal government, goes into the general fund at the state comptroller's office. There's no verification of what happens to that money. So if you have a budget over here from a school, the school says, I need X dollars, and we have a line item budget over here. We have general fund money over here. How do you know there's a nexus between them? You can't see it. You can't see the check register. You can't see the disbursement of funds. Well, in the case of Itasca, the SEC themselves have put people in jail over this. There's all sorts of problems here. Bottom line is, none of this is transparent, which violates a litany of other laws, including state and federal. But the point of the matter is, Mom and Pop can't see any of this. Your equity is literally being stripped. And I want to take a second and explain how this works. You have an amortization schedule, most people do, on their property, regardless of a house or a commercial property, income property. You have an amortization schedule. And you depend on that amortization schedule such that after 30 years, give or take, your house is bought and paid for because you get principal reduction. So the principal's coming back to you on your mortgage by virtue of you paying it off. Well, let's think of what's happened here. The tax bills have gone up so dramatically that that amortization schedule is no longer your money. It's been taken from you. The taxes, the demand on the real estate taxes took your amortization schedule. So not only has the equity been stripped straight out of your property, but the amount of money that you would have had in your pocket over these years, but for the real estate taxes, has also been stripped. Now, there's a third element here. Let's talk about the future. I asked a question several months ago to Mr. Don Spencer, the chief appraiser of the Denton Central Appraisal District. And I said, Mr. Spencer, what is to stop you from raising the property taxes to infinity in 2025? Now, it was a rhetorical question. I asked it on purpose to make the point. The answer, according to the criminals, is nothing. So your future, let's go 6 years into the future from today. How many more years of increased inflation by virtue of the fraud can you stomach? Can you pay? And speaking of stomach, in the state of Texas, there's an entity that feeds over 4 million meals per year. The amount of people that are going hungry can literally be correlated right back to the real estate tax. You want to solve that problem? Get rid of the real estate tax. So there's people out there say, well, we're doing this for the children. Yeah, no, you're not. You're lying. You're delusional. You're wrong. You may think because you've been told this is being done for the children, but this is not. How can you say, well, we're doing this and increasing these debts for this children when not a single person, not one, in the United States of America signed a piece of paper that said, I agree to go bankrupt to support my school district? First thing. Second thing is, how many of those children that are going hungry do you have any knowledge of? So if you're truly concerned about the children, you would be paying attention to what we're saying, not just what we're saying, but what we're proving. Read the amicus brief. If somebody is out there that can say, okay, this is wrong, go ahead and say so. But I'll point out, we've had over 6 million views in the last 4 months alone. And I've asked dozens of times, if there's anything that's wrong, we'll fix it. Please. We're not the least bit offended. So far, crickets. And then the biggest point to that is even the attorney general themselves can't come up with saying, oh, this is wrong. They simply issue a blanket statement that says, we're not the repository of these documents. Well, that statement is a bald-faced lie because Mr. Mashburn himself filed multiple complaints with the attorney general personally. So when you understand that they're just simply saying, we're not the repository, they're basically pointing the finger at each other. And this gets even bigger. So let's not pick on the state of Texas for a minute. Let's switch elsewhere. Let's look at the state of California. So in California, they have multiple propositions. So everybody says, well, we've got Proposition 1 and our property taxes are being held down, et cetera. Except that, no, that's not true either. Do you know that in the area of the Palisades, they now have a 5% sales tax on a house? Nothing's selling. So when somebody says, well, the real estate taxes are reasonable, no, they're not reasonable. You can't add. Your problem is you've been told a lie. The real estate taxes, just because you change the name on a Proposition 13 or Proposition 20 or Proposition 30, it doesn't matter. It's coming, if you're paying it in the form of a real estate tax, it's a real estate tax. If it walks like a duck and quacks like a duck, it's a duck. That's the problem. People have been told, well, the real estate taxes aren't so bad. Colorado is another one. Let's stick with California for a minute. So when you realize how bad the taxes are and how bad the fraud of the home overvaluation is, and I made this point, I received a phone call from somebody in Florence who happens to live in California. They're extremely well known. And she was saying, well, these houses in this particular area are $10 to $15 million a house. And I said, no, they're not. I said, it's what you believe the market is. Price is what you pay. Value is what you receive. When you understand how much the real estate taxes are, because I came right back after her and I said, listen, if you've got a 5% sales tax on the value of a home, plus you've got the real estate tax, what is the true value of the home? The answer is it's the home minus the last 5 years of fraud where the values have gone up 100%. The values emanated from the central appraisal districts. The values aren't real. They simply lied to push the values because they had to get their hands on additional interest income to cover the fraud off. The last 5 years where the values across the United States on average have gone up 100% is a lie. It's a fraud. It's not real. And the reason we know that is because all you have to do is look at the median household income and determine how much can that median household income truly afford. It's the median household income that tells the truth. Everything else is a lie. So when you start to back into the math, and by the way, this is stated in this amicus brief, we've spelled this out on purpose to drive the point home. It's only a handful of very, very potent points, but nobody can beat up the points. And that's the issue. So if you're being told a lie based on what the true value is, it gets even worse when you realize, well, the insurance companies themselves obtain values from the central appraisal districts. They say your home is a $5 million home. Well, in the last 5 years, if it's gone up 100%, it's a $2.5 million home to begin with, minus depreciation, minus the accounting fraud at the school districts. And to this point, I want to come back to Texas just for a second. Arval, Texas, the outstanding fraudulent school district bond debt, $343,000 per house. The median value of a house, $450,000. Godly, Texas, the outstanding fraudulent school district bond debt per house, $120,000. Median household value in Godly, Texas, $160,000. You see the problem here? This is a silent second mortgage. It's no longer so silent. The population can't afford it. The median household income does not exist to pay for the second mortgage. And then in terms of shoving this down the throat of the Federal Reserve, watch this for a second. Under what planet can a house go up 100% in 5 years when the worst case scenario on the inflation, just for the sake of conversation, 2.7% a year, 3.5% a year, 4% per year, sub 20% in total inflation, which was created by the printing of money by the Federal Reserve. But the Federal Reserve's own numbers are 20%. Okay? Where'd the other 80%? How did that happen? The answer is pure fraud. And then in the case of the Palisades, back to California, where so much is burnt, do you know that the school districts themselves have now said, well, we've got to rebuild these schools? Well, I saw that document just yesterday. It's interesting. The document is completely devoid of any mention of insurance. Where's the insurance on those school buildings? Where's the insurance on the bonds that paid for those original schools? Then you start looking at California itself and you realize how many houses in the Palisades no longer exist. So the Palisades has their hand out for money. Give us this tax money even though you don't have a house. And oh, by the way, we may not issue you a building permit. So there's an interesting, coming back to Thomas Paine, when all other rights are taken away, The right of rebellion is made perfect. The War of 1776. That statement was written in 1775. So the point of the matter is, why are we doing what we're doing? We're doing it to try and stop that type of problem from coming up. You steal money from people to this magnitude and you are caught. Frankly, you deserve whatever's coming your way. But we don't want to see anybody get hurt. What we're trying to do is get a floor and a ceiling and force the federal government and the state of Texas and all these other states to deal with this before it implodes. Because once it implodes, this is game over. This is 2007 on a magnitude that nobody's ever seen, right? Because in 2007, the mortgage-backed securities and the real estate, okay, that was bad. This is the mortgage-backed securities plus the real estate plus the bonds, and the bonds are magnitudes bigger than the real estate. We ran the math on this and we figured, give or take, what's the real value of these bonds, assuming that there was money to pay for it? The truth of the matter is, as far as we can tell, somewhere between 13 and 30 cents on the dollar, just depending on what school district you are in across the United States. Poorer communities, 13 cents on the dollar, a little bit more affluent, maybe 20 cents on the dollar. But the point of the matter is, the denominator is and must be the median household income. Because if 70% of your population can't afford what you're deeming through these central appraisal districts, the average home, well, by definition, it's not the average home. It's a fraud being promoted by the central appraisal districts, which are owned by the school districts. So when you see the whole picture, you begin to realize we either put a floor under this and a ceiling on top of it, or it will implode. It's not a question of when, it's just a question of if. So in other words, this is going to happen. The if component, it's already started, right? So many people have lost their homes. So when does it implode in its entirety? Hard to tell. There's some people say, well, but the market is doing so well. That statement has got nothing to do with the real estate. That has to do with the stock market. And when you get into the stock market itself and you realize it's just a handful of companies, most of the stock market is hemorrhaging. But it is so much bigger. The bonds are so much bigger because the spider web goes directly into the banks. That's the problem. When that spider web starts coming unwound, there's no ability to stop it. You've got to stop it now.
That's what I wanted to, you led right to where I wanted to ask you about, was the implications both on the personal level and on the systemic level. You've addressed, I think, at least in passing a couple of times here, the impact on mom and pop, in that there can actually be taxed right off their land, that a significant portion of even homeowners who either have completely paid off their home or are current on paying up their home will never be able to pay off this runaway fraudulent real estate tax. But you also are getting to the other implication. This system, this Ponzi scheme of overinflated valuations that has resulted in fraudulent escalation exponentially of the size of the bonds that are owed and payable at all these various levels of jurisdiction. If that blows up, and I guess we can talk about this in stages, but what the implications are of systemic risk from that, and maybe you want to, in somewhere in that discussion, talk about the very realistic potential. Many of our visitors on our speakers on our channel have talked about a very likely, not just a 10% or 20% setback in actual sell prices for real estate, but maybe 40% or more based on what we saw in 2008 and magnified with the distortions that are even greater than that. So in all of this, kind of playing right into the World Economic Forum statement of you'll own nothing and be happy. I don't know about the happy part, but I can see the you'll own nothing part starting to take place. So could you talk to us any further words on what a 10 or 20 or 40% drop in appraised home prices or sale prices would do to the individuals, but also to the system, and how that implications that systemic web that you just described?
We have what's called a compound interest calculator. And if you take a bond, that bond has a face value, and then that bond has interest. But they keep stacking the bonds annually. So you have compound bond fraud, and you have the interest on the outstanding compound bond fraud. Well, to make a long story short, give or take, $5 billion in bond fraud over a 20-year or 25-year cycle goes up anywhere between 5 and 8x. If the money doesn't exist today because mom and pop don't have the money to pay the taxes, then they don't have the money to pay the taxes, let's call it the unlimited tax based on what that underwriter claimed in their document. Then they don't have that money to pay tomorrow. Therefore, there's only one solution for these central appraisal districts, and that is to keep the Ponzi scheme going. Give us more money to cover the outstanding fraudulent school district interest. They're not paying off the bonds. There is no way to get this down to zero. They have literally jumped the shark. The interest is greater than the principal. So let's break it down so that people understand this. If you buy a bus, school district buys a bus today for $300,000 and they lever it. Do you realize that that $300,000 on value of that bus turns into $1.5 million? Under no circumstances should a school district ever be allowed to raise a bond. That game's over. You've been caught. They have to go to zero cash, in other words, zero bond, cash only basis. Then the truth is known. So I wrote a bill for Helen Kerwin that lays out exactly how to do this. And the bill would be applicable because it's repeal all property taxes in favor of the uniform states sales tax. So the uniform state sales tax would start off in the case of Texas at 15%. In the case of Montana, it would start off at about 11%. So it just depends what the state is. But the point is, that's only for 3 years. So it's 15% for 3 years. Upon stabilization in the state of Texas, it drops to 11%. And those numbers work, and all of it is fully transparent. What you can't see is all the fraud that's being committed. So mom and pop don't have a chance. When they go into these ARB panels or they go to protests, they're getting run over by a litany of lies. And by the way, we have all this on tape. We've got videos of every stitch of this. So we even have a video on Denton Central Appraisal District where the board member himself is telling Mr. Don Spencer, you are the masters at guessing. Well, their job isn't to guess. Their job is to quantify. So the issues on the overall scheme as to what's going on here are so deep, so large, the system is irrefutably, irretrievably broken and bankrupt. And then with regard to the World Economic Forum, this is where mom and pop have got to start standing up because, in truth, these morons are monkeying with human nature. These are the morons that will end up literally starting a civil war. This is where we are. This is what you have done. You've stolen this money. The SEC in Washington has got to get involved and understand what's going on here and force the state of Texas to come into compliance. And the SEC's got subpoena power. They literally can march into the Attorney General's office and say, turn it over. If you don't, we'll arrest you. The World Economic Forum are idiots. I have no love for them. I don't want them on the face of this earth. I understand the math. We're laying this case out, and I defied anybody at the World Economic Forum to read this amicus brief and tell me where I'm wrong. Tell my attorneys where we're wrong. Tell the SEC where we're wrong. Well, you can't. And therein lies the problem. You are a liar, World Economic Forum. Anybody who is promoting this nonsense and not doing their job have in fact lied to the public. You have committed fraud. You are complicit in aiding and abetting a criminal conspiracy to defraud. And I want to touch on that point just for 1 second with regard to the central appraisal districts. In my particular case, I made a point to the board at Denton Central Appraisal District. Do you understand that when your chief appraiser says that an income calculation worksheet is correct and the employees made up the income, they made up the expenses, they made up the cap rate, do you, this board, understand you are committing bank fraud? If I walked into a bank with that exact same income calculation worksheet, which by the way is in the amicus, and I presented that to a bank and I drew down an extra $1.7 million, I would be arrested within 60 days for bank fraud. That is what the central appraisal districts are doing across the United States. The pattern and practice is clear. You can change the name, but the net result, and I'm referring to California, you can change the name of Proposition 12, Proposition 13, Proposition 24. It doesn't matter. The net result is you're equity stripping mom and pop. Your values aren't real. There's no math to justify the values. None. And then I forgot one point in California. When you have fewer homes that exist today to pay the real estate taxes due to the fire or any other circumstance, do you realize that the bonds outstanding are still growing? They're not diminishing. Therefore, the remaining people are going to be obligated by virtue of a fraud to pay for what the other people can't pay for. What we did in the bill is we said, okay, within 60 days of signing this bill, the school districts must deliver to the state comptroller for public viewing a statement that says we can pay, statement and proof that we can pay these bonds off within 3 years down to zero. And if they can't, they must file immediate bankruptcy. Well, let's talk about Ohio for a second. In Ohio, it turns out that they're in worse shape, believe it or not, than the state of Texas. See, in the state of Texas, we have what's called Chapter 45 and Chapter 46 of the Texas Education Agency. And by law, the Attorney General is the sole signator to ensure that there is money available to pay for the bonds. That's his job. He failed. He's caught guilty. End of story. Again, SEC has to get involved. Well, in Ohio, it turns out that the law is such that if you, the school district, can raise the bonds, do it. There's no governor. So the governor is the 25% cap of the prior year's outstanding bonds. That is what the Attorney General is responsible for looking at. In Ohio, that governor doesn't even exist. And that is how the government creep expansion occurs. They're literally stealing taxpayer money. The floor and the ceiling is not an idea. It's a demand. Because if you don't do it, the system will implode. And it will make 2007 literally look like a picnic in Central Park.
You have this amicus brief on your website, as well as some other documents that are very useful for people to understand the individual household impact, the cumulative impact of these fake and distorted taxes and the loss of financial freedom to have invested elsewhere or saved or whatever that the individual wanted to do. How about a call to action for people that are in direct support on the local level there of your Texas amicus brief, but also in other areas of the country, what they should do if they don't want to have this blow up and don't want to have their property subject to being taken out from underneath them because of this fraudulent tax?
The legal route is time-consuming but necessary from my perspective. And to that point, the amicus is applicable across the United States. So we're asking people who are capable of writing an amicus brief. It doesn't have to be long because we've laid it out in the amicus that we just filed on Friday. But the bond lawyers associations, by way of example, the farm bureaus across the United States, by way of example, because farmers are getting hit over the head with all of this. Any entity, let's call it institution, and or law firm that is capable of writing an amicus brief, just follow what we've set up. We're asking them to please write an amicus brief in support. As far as people are concerned, we have a letter also on the website that says, yes, I want to support the petitioner in the Vexler case. So you can follow that letter. Over and above that, at the very top of my website now, top dead center, what we've accomplished literally in the last 3 weeks has really, as far as I know, never been done. And it all shows up inside of this amicus brief. This is the map as to what happened, how it happened, and who did it. It's all there. So people wanting to support this, an amicus of their own is ideal. and necessary. And a letter of support is also ideal and necessary, but it's got to be done quickly. With that said, from a standpoint of people wanting to protect themselves as to how bad this situation is, there's a spreadsheet also top dead center. Everything we've done really in the last 3 weeks is now top dead center. We pushed it up at the top because we knew the amicus was coming. There's a spreadsheet, and you've got that spreadsheet as well that you can put below your video. But that spreadsheet will allow everybody, doesn't matter what type of property you have, to simply say, here's been my taxes for the last 5 years. Here's what I believe are my taxes in the next few years. We've set the formulas up. All you have to do is plug in the information inside of the blue cells, and you're going to get the picture. But as far as your community is concerned, at the bottom of that spreadsheet, there's a section that says, find out in your school district what the outstanding bonds are. Now, most people can't, but try. If you can find out how much the outstanding school district bonds are, and then find out how many houses are in your school district and divide those two numbers, you're going to get the picture of how bad this is. Now, I want to point out that the BRB in the state of Texas, which is the Bond Review Board, of which Governor Abbott is the chairman, has a different set of numbers than the Texas Education Agency by billions. The BRB is short billions. You're going to find inconsistencies in your own school district. You're going to find things similar to the 313 agreements, things similar to the off-balance sheet, which you won't be able to see, but it's there when you start reading and understanding the balance sheets. The point is, whatever number you can get your hand on, that's perfectly fine. You must realize it's not the real number. The real numbers are being hidden by intent. That's part of the problem. That's part of the fraud. And that's the fraud why we're jumping up and down on the SEC saying you've got to shut the state of Texas off from access to the bond markets until you, the SEC, can get your head wrapped around this. This is a necessity, because if you don't, the system will disintegrate. That's the math. And this math is much bigger than any government. This math is real. And nobody can disprove anything we've got. We're asking, we're begging, please disprove us. Problem is, you can't.
Just going to tell people, if they look in the description of this video, they'll find a link to the petition and the other documents that you have available on your website that they can share with those to get people to start taking action to support your work. You have thrown yourself into this as the point of the spear here on behalf of, it seems like, all of the property owners and potential property owners in this country against this fraud. But as you describe it, it's to prevent a catastrophic blow up and breakdown and collapse of the financial edifice that's been built, fraudulently built around our property tax valuations and the bonds that the school districts and other municipalities have built out of that are threatening the stability of our financial futures. Mitch, it's not common that people who even have the capacity to understand this get involved to the level that you have. We're grateful that you have. We want to support you in any way. Anytime you want to come on and give us updates, you have the floor here. And on Liberty and Finance, we have 125,000 and growing subscribers, pushing 130 across all of our platforms that we're on, including YouTube. We're grateful for that. Is there anything else you want our viewers to know about at this moment, in addition to what you've already told us?
The US dollar must be saved. And there's no doubt that it has been devalued, not debased, but devalued, two different things. But it must be saved. There are people saying, well, this is the talk recently, the Bitcoins of the world are going to end up being the currency. They don't understand what money is. Money over 5,000 years are precious metals because it keeps up with inflation. It's something that's not easily seized by a government. Bitcoin itself, its original intent, was to be a decentralized platform, peer-to-peer, person-to-person. Well, the government's now got their hooks into it. What its future holds, I don't know. What I do know is until it is backed by a hard asset, precious metals, oil, corn, call it whatever you want, it's got to be backed by something. Because if you understand what currency is nothing more than an exchange, a piece of paper. Your US dollar is a note that you people believe has credibility to buy you something. It's the credibility that is at issue. Well, you can't have these bond issues and say we're going to print more money, because you will destroy the credibility of the US dollar. You will literally cause the Weimar Republic. Therefore, we're right back to this statement that I said before. Put a floor under this and put a ceiling under this. Put that 5.1 trillion immediately in a box, and let's get some very smart people together and figure out how we're going to deal with it without printing money. There are answers. I've got ideas, but for me to have that conversation, I'm negotiating with myself. It doesn't make any sense. I need the federal government and the state to step to the plate, and we can fix this. Now, the bill that I wrote for Helen Kerwin does fix this problem for mom and pop, because when you repeal all real estate taxes, mom and pop's balance sheet now has the asset beneath their feet. The bill solves the problem for mom and pop. It doesn't solve the problem for the bondholders. We've got to do both simultaneously across the United States. It is what it is. The math is going to cause an out-and-out collapse. It's going to cause a domino effect that once it starts, there won't be any putting it back, because nobody's been able to think fast enough to get it there. And then I want to point something out. So I'm doing this because I'm just a monkey in the middle. I'm a builder and I'm a developer. I've been doing that for my entire career. But I am only as good as my residents and my tenants can pay rent. Other than that, I'm useless. Well, I've sold off most of what I had because I saw this problem coming, because I had tenants that couldn't pay. And I went through 2007. I saw those ramifications, but this is so much bigger. This is going to be so much worse, because the government itself, i.e. the Attorney General, the state auditor, the state comptroller, they're in it. They're in the shenanigans. They're not doing their job. Without a probability of default, think of this for a second. Probability of default is a mathematical equation that looks at bonds, and given a set of criteria, what are the odds of those bonds being paid off at face value? The second you enter the word fraud into a school district, and you put that formula together, a bit of a story there, but when I figured this out, I thought my formulas were wrong. Because it was so horrific, I thought I had a bust. And I sent it over to a fellow I happen to know in California, who happens to be a bond underwriter. And yeah, I wasn't wrong, to make a long story short. The point of the matter is that the cost and the ramifications of not having a probability of default by any of these entities is irrefutable proof that A, apparently nobody's running the government to protect mom and pop. B, they don't care, because when you look at the flippant responses that they gave to a 15-page Freedom of Information Act, this is exactly why the SEC should be up in arms and simply say, that's it, we're going to get a subpoena. We're walking into the Attorney General's office and do what they've got to do. The SEC's got that ability. The point of the matter is there are no protections in this system right now, today, here and now, for mom and pop and property owners. You're going to have to stand up in mass and simply say, we're not taking this anymore. Start filing complaints with your politicians, with your DAs, with the chief of police. You're going to have to get involved and say, this is what's happening, and it must stop. You must demand that the DAs file the criminal complaints against the Central Appraisal District's chief appraisers and the school district superintendents who are committing accounting fraud and bond fraud. You can't sit there and do nothing. You now know that these problems are real. You now know that the money is being equity stripped right out of your pocket. Sitting still isn't an option. And then from those people who have a little bit of cash, that they don't need the cash, understand what I said before. 60% of all bank reserves are held in bonds. If you've got money in a bank, you've already got 600 banks on a watch out of 4,700 remaining. Are you lucky enough not to have a bank that isn't going to default? I don't know. But if you've got cash sitting there, why? You're much better off, even at the prices of today's precious metals, you're much better off going into precious metals because you don't have any security. Until this problem has got a floor under it, you don't have security. You think you do, but you don't.
Mitch, I may have to pull you in on discussions that I give to groups of retirement fund managers and real estate fund managers, because we've been getting a cold shoulder to some of those approaches. The Florida Association of Homeowners Associations said, for example, that physical precious metals are a speculative and volatile investment which pays no dividend and is not federally insured. Therefore, it does not meet the prudent investor rule, and therefore, all of these homeowner associations need to keep their savings in bonds, that kind of thing. You're saying, look out below if people don't take protective action, and we don't do what's necessary to rescue both mom and pop, and to the extent possible, the system, the banks, the districts, the jurisdictions as well. There's so much more we need to get into in future visits with you. This has been a drink from a fire hose for all of us, and I'll put a link in the description to the pages you have on your website where these documents are available, and people can learn more and take action right now. And gosh, just on behalf of all of our viewers and subscribers, thank you for coming on, making the time, this very first time to come on Liberty and Finance.
Great. Thank you very much for inviting me. I hope it wasn't so overwhelming, but we need to say these things to help people. That's the reality.
Well, there's two kinds of overwhelming. One kind of overwhelming is being bewildered with the vocabulary and the concepts and the technicalities and the relationships of things. It's complex. On the other hand, it's bone simple in the sense, as you've pointed out, is if school districts and municipalities didn't have the funds and just made up valuations to get their funds and put mom and pop on the hook for it with no consent, that's pretty simple and pretty horrible. The other thing that makes it complex is the implications as this spreads, and we didn't get fully into that as far as how derivatives and packaged whatevers are built on these bonds, and banks depend on those and other things depend on those, to where this could absolutely be the stone pulled out from the dam that starts a major systemic financial collapse if it's not addressed and addressed quickly. That's why we need to have you and your team, as well as the resources that you're helping to provide for our viewers, available. And thank you for that. And look forward to our next visit here on Liberty and Finance with you.
Great. Thank you very much.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for September 15th through September 22nd, 2025, while supplies last. This week, 1 10th-ounce gold maple leaves are just $37.50 over melt per coin. 1 ounce assorted silver bars are just $1.65 over spot per ounce. We also have near historic low premiums on pre-1933 gold. Call us for details. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.